Hello folks, welcome to Pro Trader Strategies Market Commentary for Tuesday, April the 13th. I'm Eric Wilkinson, and you very well may recognize me as the Wolfman from mainstream media, where I talk about economic data, the geopolitical environment, how those come in to impact the markets with some of my market analysis. I do the same thing in these daily market commentaries, but I also talk about the option strategies I'm implementing into my portfolio based on those assumptions we come up with in that market analysis. And for you folks, I've even gone further and streamlined the process for you guys to find the optimal option strategy for any given assumption. We don't just look at a bullish assumption and immediately go to a long call. No, what we do is we look at this underlying, see what's going on around the pricing of the options, and that will ultimately tell us what strategy is best suited for our assumption. All right, so without further ado, let's get on with the economic data and see how that's impacting the markets today. Across the pond, we got the construction output out of Great Britain, better than expected, coming in at 1.6%, expected to be 0.5%. They did revise last month's number down, albeit just slightly. Then moving on to the manufacturing production coming in at 1.3%, expected to be 0.5%. Nice to see that these data points on the manufacturing starting to ramp up here across the pond. Industrial production 1%, expected to be 0.5%. So manufacturing production better than expected, as well as industrial production there. We also got the zoo economic sentiment out of European region. That came in at 70.7, expected to be 79. So coming off just a little bit, meaning that the consumer and the businesses are kind of starting to worry about the economic outlook. And most of that's probably because we're looking at an economic data point across the pond, and they've been seeing more lockdowns. They've been seeing this variant come back and been a little bit more difficult to deal with. Another thing that's also happening today that we need to talk about is Johnson & Johnson has their vaccine getting pulled from many places. Why? Because out of 6 million vaccinations that they've done, 6 people have started getting blood clots, and mostly in women too. So they haven't really narrowed down why, but the fact of the matter is Johnson & Johnson is getting pummeled today based on that. All right, so anyway, United States, we got the NFIB, which is National Federation of Independent Business. It's a small business index, a gauge that we would really like to keep an eye on. Why? Because if the small businesses is doing well, then that means the economy is doing well. And it came in right in line with expectations at 98.2. And then we got the PPI earlier on. Remember, we were talking about, are we going to see them passing on higher prices that they were seeing on the producer side to the consumer? And that would be a healthy thing for the business, but that's also starting to show inflation in the economy. So CPI coming in just slightly hotter than expected at 0.6%, expected to be 0.5%, and the core CPI, which is going to strip out food and energy, coming in line or slightly higher as well at 0.3%, expected to be 0.2%. We also have Bostic speaking later on today, who is a FOMC member. All right, now we got the crude oil futures moving a little bit higher today, back into the 60 handle, but something to note here that we are bumping up against the 200-day or the 50-day simple moving average here. That is going to act as overhead resistance, and we are, like I said yesterday, very close to that value area high, which should start slowing down some of this momentum up here at this level. But we are building a volume node here, and that is going to be where we start to see acceptance of value if it continues to do that. And right now, it looks like people are accepting value at $60 a barrel here in crude oil. So we're kind of settling down right here at this level right now. Bonds are moving a little bit higher today, only by about 9 ticks. For the most part, that's unchanged at this level. And we are, again, building up a volume node here as well, where we're accepting value at this lower level, which means higher interest rates there. There is no shortage of people looking for homes. And here in Arizona, it is very apparent where we are seeing, and my friends who are looking to buy a house just got into another bidding war and missed the house that they were trying to get again. So this is something that I'm keeping an eye on with these people, because they are going and bidding higher than what the house is listed at and still are not getting it. All right, so markets can handle higher interest rates if we're seeing that kind of demand for housing and such low inventory, because that will get people to buy the house despite the fact that interest rates might be on the move. Bitcoin making a new all-time high. Why? Well, I think a lot of this is ahead of Coinbase launch IPOing tomorrow. So there is a lot of news in and around all of these cryptocurrencies. It seems like that's all we hear this week is it's all about cryptocurrency and the creation of wealth for the millennial. Really is what they're talking about, is the millennial has a tendency to go for the cryptocurrencies as opposed to other financial investments that are more traditional, and they are seeing this creation of wealth through those younger generations investing in Bitcoin. Gold futures moving higher again as well today, but we have not gotten above this trend line, and that is something that's going to need to happen. We've already seen this paradigm shift down, where we are now seeing the volume node down here at around 1720, 1730 area. That is acceptance of value lower. So it is going to be even more difficult to get up into that 1900 handle with this value being accepted at a lower level here today. NASDAQ kind of blasting the top off of any topping pattern we were talking about yesterday that might be setting up. Nothing to see here other than a continued rally and new all-time highs. We've got the Dow Jones Industrial Average. Yeah, they're off by about 100 points, but at the end of the day, it seems like it's just a bit of a sector rotation, and I think we're going to continue to see this theme throughout the rest of 2021, is shifting out of the reopening trade, which I think we saw that rotation into the reopening trade, and it got up to about where value is. Now we're starting to see some of this rotation out of the reopening and back into tech. So that's why we're seeing the NASDAQ, maybe even the E-mini S&Ps do a little bit better than what we're seeing with the blue chips, as the blue chips are going to have more of that reopening trade in it, and we're seeing that weakness today there. E-mini S&Ps, positive territory, new all-time high again, but this one is making the topping pattern still stay consistent. Yes, we haven't confirmed it or anything, but we do have a nice little topping pattern, and if I zoomed in on this, we can see that that is a hangman doji right there at the top of that move. And then we go over to the mini S&Ps, breaking it down into 30-minute charts here. We can see overnight inventory was short, but coming into today, pushed those guys out and got flat. Now, the market is flat right now, and just not seeing the volume that we'd like to see today. It's really calming down. Most people probably shoring up positions, putting on those hedges ahead of the earnings that we're going to start getting here this week, mostly in the bank sector, the banking area, and then we'll start moving into some of the other tech, but banking usually leading off earnings season, and that's what we're seeing right now. So gonna have to sit here and keep our eyes out to see what's going to happen, because remember, in the last earnings season we saw better than expected earnings, but we saw the markets come off. Most of it was due to these CEOs not really giving any forward guidance, not having any clarity as to how the economy was going to be performing going forward, and they really got beat up for it. So heading into this earnings season, how is the market going to react to these earnings? I'm going to keep my powder dry and play out a couple of these to see, or sit out on a couple of these to see how they play out, and then start getting my toes in the water to get my feet wet. Before I get my feet wet, I should say. All right, IBM, I'm still long IBM, lowering overall cost basis. You guys know I've lowered my overall cost basis on this trade by about $5 by doing covered calls. I got put this stock on an earnings trade where I threw some puts in there, and with short puts, market came down, I got assigned a long position in IBM. Happy to do so because I got good strike location. I got a good area. It was right around that 120. I've lowered my overall cost basis by well over $5 by doing these covered calls in here. So my break even on this trade is right around 115, and I threw in the covered calls where I was lowering overall cost basis in this trade. And if you guys remember, I did the April and sold the 136 calls you know, against my long stock there. Lowered the overall cost basis. I sold it for, I believe it was 56. Or actually, I think it was 61 cents. I bought them back this morning for 10 cents, but I just want to make sure that I'm quoting that correctly. I don't want to misquote what I paid for that one there. I don't know what that was. 61 cents, bought them back for 10. There we go. Sold the 136 calls. All right, so out of that trade, still have on my long puts that I added to my IRA and my trading account, long the stock still. Game time decision on whether I'm going to go into this earnings long that stock or not at this point. I might just get out of the stock, start selling some puts at lower levels, try and get good strike location again, and continue to keep playing this out with IBM, because we can see this is set up great for swing type trades where we get to these extreme levels. We can see those are opportunities in IBM, doing covered calls, selling cash secured puts, all of that good stuff. So fun one to trade for somebody that's, you know, maybe interested in learning to trade options. I think that this one is something that should be on everybody's radar to trade. Covered calls, cash secured puts, having your portfolio. It gives a nice dividend too, folks. All right, so that's about all I got for you guys. Take a moment to go over the disclaimer at the end of this. And hey, if you like this video, you got anything to take away from that, smash that like button for me if you would. Questions, comments, or anything else, go down there in the comments section. Reach out to me. I'm going to make sure you guys are clear of concept before I move on to anything else. So I want to make sure that you guys are taken care of there. So if you have any questions, comments, or anything else, we'll go back and forth down there in the comment section. That's all I got for you guys. Other than, if you can't take that, take it easy.